My name's Anthony Lindsay, and I've been in finance for over 30 years. I've done everything from wealth management to collections to lending. And I approach mortgages and I approach what I do in a very unique way. If you look at the hierarchy of needs, shelter is one of those things that is very important. So I view helping someone get a mortgage, put their family in a home as something that is really important just in the grand scheme of things. But if you're looking to invest or get a buy to let property, this is the place to be. So one of the key things for you to understand when you're looking at getting a buy to let mortgage is that your home may be repossessed if you do not keep up your repayments on your mortgage. So getting into the property is just the first step. The basics of getting any mortgage, I've broken down into something that I call SID. So it's your credit profile, your income, and your deposit. In other videos that I have on the channel, I talk about how to improve your credit profile. I talk about the difference between your credit profile and your credit score. I talk about ways of generating additional income. And Tapiwa will be also talking about some property strategies. And I also talk about your deposit. Now, if you're considering getting a buy to let mortgage, one thing that you want to think about is, are you a first time landlord? So, as with most things that are finance related, there aren't just yes or no. There are different levels of criteria. So, when you approach a mortgage broker or approach your bank and ask them a question around a buy to let mortgage, always understand that there are so many different variations. You will find that some lenders will not lend to what they call first time buyer, first time landlords. So, what they want to do is they want to see that you've had a mortgage, a residential mortgage, or some type of mortgage in the past. That's not to say you won't be able to get a buy to let mortgage, but it will just reduce the total number of lenders that will be able to provide you with a mortgage. Another thing to think about is, are you a high rate taxpayer? Some of the criteria for your buy to let mortgage will be different based on the fact that you're a high rate taxpayer. And you want to think about the rental income. What I mean by that is, if you get a buy to let mortgage, and let's just say you're paying £1,000 a month for that mortgage, the lender wants to see that the rental income, the fair market value of rental income in that area, is usually about 35 to 45% higher than the mortgage that you're paying. So as you go out and try to find a property, think about where it's located, think about how much you'll be able to get in rental income. A question that people ask quite frequently now, because it's all over the internet, is the question around, should I buy through a limited company or SPV? Now, I'm not here to give you accounting advice or tax advice. So I do recommend that if you're asking that question, what you want to do is you want to go to an accountant, but I would recommend that you go to someone who specializes in property. Not all accountants are created equally. Although some will dabble in property, it's much better if you go to someone who specializes in property, that they can give you the proper advice. In speaking to that professional, you have to be very open, you have to be very honest, and explain what your long term goals are. So, understanding your long term goals will help that professional give you the best advice. They'll be able to explain to you whether it's best to just buy it in your personal name, through a limited company, or through an SPV. Consider the additional costs. So if you're a first time landlord, don't think of it as a get rich quick strategy. Investing in property is risky if you don't know what you're doing. Some people win big, but some people lose big. And it's also not something that will happen overnight. So be prepared to surround yourself with people that can give you the right advice, people that can maybe do the renovations, people who know what they're doing. Don't just rely on friends and family on weekends to come in and assist you. Make sure that you're working with professionals, and always be willing to pay professionals professional prices. So don't try to get things on the cheap, because quite often in the long run, it will end up costing you more. And be prepared to be in it for the long haul. Not everybody's going to purchase a property, flip it, and make money on it. So the key stage is, once you do decide that you are going to get a buy-to-let mortgage and many other mortgage types, is the financial assessment. So you'll speak to a mortgage broker. They'll do a financial review and assessment. And if you've noticed, I have said speak to a broker. The reason why you want to speak to a broker is you'll get more choice. You'll have access to more products. When you go directly to the bank, the banking advisor can only speak to you about that bank's products. So they may be giving you their best rate, but it doesn't necessarily mean you're getting the best rate. Once the broker's done a financial assessment and understood what your goals are, they'll be able to produce an agreement in principle for you. Some people call it a decision in principle. Some people call it a mortgage in principle. It's essentially a document that will say about how much that bank, in theory, would be willing to lend. But keep in mind, an agreement in principle isn't necessarily going to take into account everything, because you can go online. I could get someone an agreement in principle for £1,000,000 right now, because it's not asking you to verify the information. It's just doing a calculation. Once you have the agreement in principle and have an idea of how much you can borrow, you can go out and search for the property that you want. Once you find the property, you're going to need to then negotiate and get an offer accepted. Once that offer is accepted, you move from the agreement in principle stage to the actual mortgage offer. A way of thinking about it is, the agreement in principle is based pretty much just on you as the individual or the person making the purchase, whereas the mortgage offer now includes the property details. So you may find that you had an agreement in principle that a bank would lend a certain amount, but when you move into the mortgage agreement stage, they may say, well, we'll lend to you, but we might not lend on this property. So keep that in mind. And it's always good to have your mortgage broker involved in the purchase process, because they may be able to identify things that may be problematic when you get to the mortgage application stage. Beyond that, you're going to have your legal work, exchange of contracts, and then completion. It's always good to get a solicitor involved as early as possible, because the purchase process can be the process of hurry up and wait. So nothing happens for a long time, and then things move very quickly. And when they're asking you for your solicitor's details, that's not the time to start looking for a solicitor. So what are the next steps if you're looking to get a buy-to-let mortgage? Get an AIP, start house hunting, and don't forget to tell a friend.
If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Anthony Lindsay. My phone number will be in the description. And I've been in finance for over 30 years. I've done everything from wealth management to collection, so I know a thing or two.